Hey, welcome. How's everybody doing? This is Greg from DLA Markets. A little trouble speaking there. And it is Friday, and we're going to do a week in review here on the markets. A ton of stuff happened this week, and so haven't done a live stream in a while, so I wanted to do the update and talk about a couple things. In terms of some of the companies that reported this week that are of interest to the channel, and also talk about some of the exciting things that are going on in the channel for you to be aware of if you're a subscriber or if you're thinking of subscribing. So it was another wild week in the market. And before I talk about the market, let me just give you an outline as to what I'm going to be going over in this live stream. First, I'm going to talk about the market really briefly. Then I'm going to talk about some important economic data that came out that affected the markets. And then I'm going to talk about some earnings that came out for two very important companies that we follow on this channel. One being, of course, Exxon, which anyone who's a subscriber knows I talk about that. And I've recommended Exxon for a couple of years now. And also Google or Alphabet, which also reported this week. They both reported this week, and I'm going to talk about that. And then at the very end, I'm going to talk about what I see as the biggest risk in the market today, which not a lot of people are talking about. And then I want to talk briefly about a couple interesting things that are going on with the channel that I wanted you to know about. Okay, so let's get right into it. All right, so first of all, the market, okay, it was another wild week. Today is no exception. The Dow was up over 800 points. NASDAQ was up over 300 points. The S&P was up over 93 points. Overall week, all the indices were up. I view this as, you can call it a relief rally, or you can call it a rally in a bear market, whatever you want to call it. The market over the last few weeks was tremendously oversold and due for some kind of a rally. So with some of the information that came out this week, market participants took that as a signal to buy. You know, just to emphasize what I've talked about a lot on the channel for the last couple of years, these short-term movements, they really mean nothing. Do not dwell on them either in your portfolio with companies that you have a strong conviction on. The up and down movements on a daily basis or even weekly basis really means nothing. So don't focus on that. But I know a lot of people, when they see their portfolios going up and down, that is something that they do focus on. The big news this week was U.S. GDP, okay? U.S. GDP was up in the third quarter, 2.6%. That was a little bit better than what was expected in terms of the consensus of 2.3%. This, to me, really doesn't mean that much. The first and second quarter, of course, was negative. Second quarter was down 0.6. First was down 1.6. So that's down 2.2. When you add the 2.6 and the 2.2 together, the economy was up overall so far 0.4%. This is, you know, de minimis. It basically means the economy's flat, so to speak. And one important thing for you to realize and note is that most of that 2.6% increase in the third quarter was due to narrowing of the trade deficit. Okay, so that was the bulk of that. That was a one-time event, which is not going to be repeated. So essentially, the quarter was flat. I mean, for all intents and purposes. Okay, so we're still in this situation where the first two quarters indicated a recession. There was maybe some slight growth in the third quarter, but all in all, we're flat, and everybody's looking forward to see what is going to happen from here on in to the end of this year, and also to the beginning and middle of 2023, which a lot of people are expecting either a mild, moderate, or severe downturn going into 2023 behind the Fed tightening and the Fed raising interest rates, okay? So we'll continue to look at that. My personal opinion is that we're currently in a mild recession, which will get more and more intense as time goes on. If the Fed continues to raise interest rates, which I personally think that they're in a position where they have to raise interest rates, they're caught between a rock and a hard place when you have inflation at 8.2%. Again, that's the official print. We know it's a lot higher than that. That's an official government number. We know it's a lot higher than that. When you have inflation with that much intensity, the Fed really doesn't have an option. Okay, they can't pull back prematurely because they are a student of Volcker, and back in the early 80s, that was done. The pullback was done prematurely when the markets revolted against it, as in many cases they are now. But what happened in retrospect was that was viewed as a tremendous mistake, because inflation continued to take hold and get worse, and then they had to raise interest rates that much higher to combat that. So Powell is a student of this, supposedly, and we'll have to see what actually happens with him. But I believe at this point that the Fed is between a rock and a hard place. They can't pull back because inflation itself will tank the economy. And so all these calls that you're going to see and the intense political pressure that you're going to see in the ensuing months for him to pull back, he's going to have to just resist it and continue to raise and reduce the balance sheet. Now, just a word on reducing the balance sheet. We started this process with $9 trillion of securities on the balance sheet. They are pulling back $95 billion per month on that balance sheet. And they're effectively, again, this is all supposedly, this is what we're being told. Who knows how true it is? But they're telling us that they're not printing money anymore. They're not printing the $120 billion and buying securities anymore. What's happening with that is causing quite a bit of illiquidity in the Treasury market, which is really concerning. And what it really says to me is that if you don't have the government there as the buyer of last resort of these Treasury securities, you're seeing kind of a dearth of participants that are willing to really step up and buy a lot of these securities. The foreign investors, China, apparently there's not anywhere near the demand that there used to be. So you're seeing a very troubling trend developing where there is liquidity or lack of liquidity in the Treasury market. And that's something to really keep an eye on, because if that continues, the Treasury and the Fed are going to have to take some kind of an action to shore that up. And that's a very, very disturbing trend to me, because it means the markets can't function without the Fed printing money and stepping in and buying securities. That's just absolutely crazy. In terms of the data that came out this week, the GDP was the main thing, and I really don't think it tells that much about the economy. There's still this psychology in the market that is just will not stop no matter what happens. It's so ingrained in people today, market participants, that they just have it ingrained in their mind that as soon as the economy continues to weaken, the Fed's going to back off. So this idea of a Fed put. It just won't go away, even though everything Powell is telling us is that there is no more Fed put. The Fed put's going away. They're raising interest rates, and they're going to get rid of this inflation no matter what it takes. But people just still, they don't believe it. They don't believe it. And time will tell. But that's largely what's driving a lot of these bear market rallies that we're seeing. Again, strategically, I would still be selling my losers, raising cash. And if I put my money to work in anything at this point, it would be only in the highest quality equities, which I've talked about on the channel and elsewhere. Let's jump into one of my favorite topics, which is ExxonMobil's unbelievable earnings report. I woke up this morning to this report, and it really it really blew me away. They beat their earnings report by $4.45 a share. Is what the earnings came in at, $4.45 per share for the quarter. It beat the estimates by 65 cents. The revenue beat, okay, revenue of 112 billion in the quarter, $112 billion in the quarter. It beat the estimate by $9.11 billion. That's insane, guys. Okay, it goes, beyond anything I thought that was going to happen. Of course, most people in the market, most of these analyst geniuses, right, that follow the company, thought that earnings had peaked last quarter and the earnings were going to start coming down. That proved to be complete BS. So don't listen to market sentiment if you're owning this stock, because these people have no idea what's going on. And, cash flow was up, earnings was up, free cash flow from operations, let's see, grew from 19.7 billion to 24.4 billion. I mean, these numbers are just absolutely insane. I'm not going to go into a super lot of detail on the live stream here, because I'm going to do an entire video on the Exxon earnings. But just know that the earnings in this report were absolutely incredible. They were an all-time record, and the whole thing culminated by them increasing the dividend, which is something that is near and dear to my heart, because at my current cost basis, I'm making over a 9% yield on just the dividend. And since it's in a tax-advantaged account, that's a 9% tax-free return I'm making just on the dividend. And the stock is up 65, 68% just this year alone. Absolutely fantastic, and very happy to see that. Another thing that happened this week was Google's quarterly report. Now, Google disappointed on their earnings. It largely related to they had a big earnings miss. I don't really put a lot of stock in these, short-term quarterly reports. They missed by 19 cents on their earnings report, but the big miss was in their revenues. Their revenues missed by $1.56 billion, which sounds like a lot, but they still grew their earnings and they still grew their revenues. I think the earnings still grew by 6%. Again, this falls into, well, let me just state the obvious, that the stock sold off big this week, okay? It started the week at like 104. It's down to, that's the A shares, and it's down to 96. So it sold off significantly, bouncing around. A lot of people are selling it short term. Okay. This kind of stuff, has no effect whatsoever on the way I view this company. This company is dominant in every business it's in. There's no company that compares to Alphabet, okay? And another thing I love about the market and the simplistic way that they look at things is that, in the same breath as Google, they talk about Facebook, Meta. They talk about all these other FANG stocks, and I think it's humorous because what does Meta have to do with Google? I mean, to me, yeah, they're both mega cap tech stocks, they're both FANG stocks, but their businesses are completely different. So, they use earnings in one to analyze and match the earnings in others. Apple came out this week too, and they surprised on the upside. But Apple is a completely different company than Google. There's absolutely no way that you can compare those two other than saying they're mega cap tech stocks. But this is the simplistic way that the market views things. I'm not going to change that. But my overall view on Google, and if you've been watching this channel, you know that I recommended it pre-split, and I went in pre-split myself. I'm down a little bit on it based on my cost basis, but I have absolutely no concern about Google because I'm looking at it 3 to 5 years out. 3 to 5 years out, I put this in the same category as Exxon in terms of one of the truly great American companies, and they're dominant in all the businesses that they're in. Search, digital advertising, the cloud. Their cloud business continues to grow at very impressive rates, and their Android operating system controls more phones than any other operating system. Every business they're in a dominant, commanding position, and they've had issues with headcount. I think they'll address that. But this company is positioned better than any other tech stock in the mega caps tech stocks that I've seen. I am very confident owning Google here. And if you don't own Google, I would recommend that $96 a share is a very attractive entry point into that. And don't worry about the short-term ups and downs, okay? Because look, the market's probably going to trade down from here. You're going to sustain short-term losses. Who cares? It doesn't matter. You got to be in it for at least 2 years. 3 to 5 is really your time frame for any of these investments. But I put Google and Exxon as my top picks. I continue to be bullish on Exxon, although the price right now is very extended. So I'm not sure I would buy it here because, these oil stocks, are very volatile. So it's going to come down, and there's going to be an opportunity to buy it. Only a few weeks ago, it was 85, right? So that's an example of what I'm talking about. So very bullish still on Google. Don't worry about the short-term movements. Now, let's talk about something that I think is very important. I think it's underappreciated in the market, and I think it's very important for you to keep an eye on this. And it's always the thing that things don't. It's always the thing that people don't talk about that is always the most important, because the things that are talked about the most are already in the stocks, right? It's already in the market. It's already in the prices. It's the things that people don't talk about that will really bite you in the ass in the end, right? Now, Jamie Dimon came out, and I'm a former JP Morgan guy, so I follow Jamie Morgan. I have a tremendous amount of respect for him, Jamie Dimon rather. I have a tremendous amount of respect for him. He came out this week and said that the geopolitical risks that we are living through today, i.e. the tensions with China, okay, and its potential invasion of Taiwan, and the Russian-Ukraine situation are far more concerning and far more relevant issue to both the economy and the markets than a potential recession. Everyone talks about a recession on and on and on. Are we going to have one? Are we in one? How bad is it going to be? Blah, 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 blah. I agree with him. These geopolitical issues are far more concerning than if we're going to have a mild or a severe recession, okay? Mild, severe recession. Regardless of what happens, we'll get through that. That'll be fine. But the issue of what's going on particularly, and I think it's a little bit more relevant in the short term, is this Ukraine situation with Russia. I mean, the things that are being talked about and the potentials that could arise out of this, i.e. Nuclear involvement. Because let's take a look at what's happened. The areas that Russia currently controls, Putin goes in and he annexes them, right? So now they're part of Russia, right? So to the extent that Ukraine, backed by the US and backed by Europe, goes into these regions and bombs them or tries to reclaim them, now they're attacking Russia directly, okay? And God knows what he's going to do. And he comes out yesterday and he goes, oh, Russia is not considering nuclear weapons. That would not be appropriate. Okay. Yeah. Okay. Thanks. I feel better now. Putin told me he's not going to use nuclear weapons. Wow. Whew. I was worried about that. Now I feel better. I mean, give me a break. This thing, at any given moment, as the U.S. continues to fund it with billions and billions and billions of dollars and sending weapons there, this thing could escalate at any moment, and the use of either a dirty bomb or a full-blown nuclear weapon as a result of something that we can't even anticipate, that either Ukraine does or indirectly the U.S. does, or however it unfolds, if he escalates it, or the situation escalates to a higher degree, I mean, forget about the markets. I mean, the markets will crash, obviously, but the prospect of either nuclear war or a world war, in the worst case, it blows every other risk out of the water. Okay, and it's amazing to me that people don't talk about it more. And it's amazing to me there's absolutely no negotiation going on. There's no mitigation of this risk going on by any of the actors. And the United States continues to fund it with borrowed money that we don't have, and it's really just incredible. The markets just keep going on. Nobody focuses on it, and it's going to take something really, really serious to happen for anyone to really pay a lot of attention to it as it relates to the world economy and the markets. So geopolitical is a big thing that I focus on a lot. The other thing I've been focusing on a lot, which I think could have enormous ramifications, is the strength of the dollar. I did a video on that. I'll put it in the description, and maybe up here you can take a look at that. It was entitled, "The US Dollar is an Economic Wrecking Ball." And there's a funny picture of me with my face, with this horrified, scared look on my face. Take a look at that. But I think the story is not fully played out on the strength of the dollar and how it's impacting both developing countries and countries like Great Britain, which their treasury market basically imploded a few weeks ago. There's all kinds of things and all kinds of financial arrangements out there in the derivative market that we don't understand, nobody's talking about. And when the Fed raises interest rates and the dollar blows away every other currency in the world, shit's going to happen and something's going to break and multiple things are going to break and we don't know what it is. And that's sort of call it what you want, tail risk, call it black swan risk, call it whatever you want to call it. That risk is overarching. It's still there. And until the Fed's raising and the markets are, quote, normalized, which is all we're really doing, we're just going to a normalized position, that risk is still going to be out there. All right? So I guess that's pretty much the update for this week, but I did want to just say a couple of things for those people that are watching, that are subscribers, and there'll be a replay on this. You can watch it as a replay. A couple exciting things going on at the channel. The channel has grown to the point where we are now fully a YouTube partner. We're fully monetized, which unfortunately for you means you're probably going to have to watch some more commercials. But you know, I have to you know, make some money doing this, I guess, and that's one way of doing it. But another thing I just came out with is the super thanks, right? Where you'll see at the bottom of the videos, you'll see you can hit the icon there for a super thanks and contribute to the channel, a one-off contribution that contributes to the channel, supports the channel, so that I can continue giving you this this content. And then another thing I'm working on is I'm working on a membership program for the channel where you can join the channel if you're really interested in investing and you're interested in learning more about the markets and really going in a deep dive into different successful strategies of investing, specific stock recommendations, and you know, one-on-one contact with me and member-only content. I'm working on putting together a membership program where you can, there'll be 3 different levels of participation. It'll involve a monthly fee, and you'll be able to take a deep dive into a lot of the subjects and a lot of the things that should interest you as an investor, with the goal of making you a better, not only informed investor, but also hopefully a richer investor. And I'm working right now on specifically what these programs are and specifically what I have enough time to deliver, you know, as the creator here. And hopefully you'll find that to be something that will be very valuable going forward. Okay? Well, thank you for joining the live stream here. I didn't want to make it too long, but I'm going to put up a suggestion here of, I'm going to put actually a list here of some of the videos that I think you might find of interest. And I'll put the one on the dollar up here actually, and you can watch that. And so have a great weekend. I hope you enjoyed and got some value out of this. If you did, please like and subscribe. And I'll see you on the next video. And thanks a lot, and have a great weekend.